Welcome to episode 50 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week we bring one stock, one headline, and one reason investors should care.
This week we're immersing ourselves in gaming stocks whose underlying companies are adopting artificial intelligence to bolster creativity as well as shareholder value.
In this push to make AI a dominant force in our lives, the video game industry, a once billion-dollar pot, has been the biggest victim of the AI surge.
Pray tell, John, why is that?
There's a few reasons. One is resources. AI data centers need storage chips, which have been taken from video game development, and now a simple SD chip or a bit of RAM costs you hundreds, sometimes thousands of dollars. It's also pure industry focus. Microsoft has been spending much of its money into AI while jacking up prices on its Xbox consoles, Game Pass service, pushing exclusive titles to other platforms, and now, most infamously, forcing Microsoft Gaming CEO Phil Spencer out the door, with Xbox President Sarah Bond right behind. In their place, Asha Sharma brings her AI executive background to the role of the new Xbox CEO.
Okay, and how has the stock responded to this new development?
Oof. Well, Microsoft has lost about 20% year-to-date. The stock crashed following its Q2 fiscal year 2026 earnings report back in January. I was losing about 10% in a single day. Company's huge capital expenditures and reliance on OpenAI have contributed to that crash. CFO Amy Hood actually said that approximately 45% of their commercial remaining performance obligations balance is from OpenAI. That's almost half of the $625 billion U.S. backlog dependent on OpenAI. That's a big risk. Regardless, I don't actually think the mission here is to kill the video game and legacy.
I gotta say though, John, it sure seems like it.
The way I see it, if Microsoft actually wanted Xbox dead, they could just kill it right away with the people they have in place. Asha Sharma does have a track record of success everywhere she's gone. Microsoft CEO Satya Nadella is truly determined to shift all of Microsoft into becoming an AI company, while Xbox is just an appendage that is going through some growing pains, and this transformation is real. Sharma's actually talked about bringing Xbox back, which has also said that her first goal is to, quote, figure out what makes games great, which you think she'd already know. She also told people to check her gamer profile, which is only a month old. And she also called for, quote, bringing back the blades, which is a very obscure phrase I'm sure most of you don't even remember. It only makes sense to nerds, who remember gaming on the Xbox 360 20 years ago. So is she just telling us what we want to hear? She wouldn't be the first executive to do that.
I'm wondering if there has to be some silver lining to this cloud, perhaps, John.
I've looked around, Microsoft stock, Sony stock, Nintendo stock, they're all hurting right now. But there are a couple of gaming stocks with potential upside to watch out for. The most obvious near-term success story in my mind is Take-Two Interactive, TTWO, on the NASDAQ exchange. They own a studio that has produced a game franchise I'm sure we've all heard of, Grand Theft Auto. After a series of delays, GTA 6 is set to come out this year, and when it does, that stock is probably going to explode. In the past, the company has actually just shown a picture with the game's name written on it during a quarterly investor call, and the stock rallied on that alone. They are calling GTA 6's launches the biggest launch in entertainment history, regardless of hyperbole. And regardless of how Take-Two stock has performed in recent years, that game will likely be a major growth catalyst in November, if it's not delayed again. As of this recording, Take-Two stock has risen around 1% in a year's time.
Do you have any more stocks that are more near-term in mind, John?
One gaming stock that's seeing success right now is Capcom. CCOEF and CCOEY on the OTC markets. Its home stock is in Japan, obviously. Last week, the stock shot up on all fronts, despite trending lower over the past year, because on Friday, Capcom released a new Resident Evil game, Requiem. The Metacritic scores were huge before the game even came out. Many are calling it an early game of the year. We're only just in March. From what I've seen, it looks great on all platforms they put it on, too. Another big side of the story of gaming's transformation is online live service gaming. Lots of companies are chasing that dream because some have found a lot of success with not much production effort. And Trevor's going to tell you about one of those top names on that scene.
That's right. My gaming stock this week is Roblox, ticker RBLX on the NYSE, which offers access to a shared gaming environment hosting more than 40 million games where hundreds of millions of monthly active users play and interact.
How does Roblox stand out in the gaming marketplace?
Well, the company has grown daily active users from about 9 million in 2016 to 144 million at last count, furthering its goal to create and foster a space for what it calls human experiences, where an emphasis on playing, learning, communication, and exploration remain front and center. The company is a strong proponent for deploying AI towards this human-centric purpose, releasing a new series of tools in Q3 2025 designed to refine artistry without decreasing freedom of choice, optimizing both productivity and the creative process.
So why should investors get on board Roblox's community mindset?
Well, the short answer is that the company's approach is translating into attractive financial results, with revenue more than doubling from $2.22 billion US in 2022 to $4.89 billion in 2025, supported by an exponential increase in gross profits from $1.67 billion to $3.81 billion, respectively. The company also generated $3 million in adjusted EBITDA in Q4 2025, ending the quarter with $5.5 billion in cash and investments, up from $3.2 billion in Q4 2023 versus only $1 billion in debt.
Wow. How has Roblox stock behaved given the company's standout financials?
Shares are basically flat since 2021 and have been cut in half approximately from its all-time high in 2025. This is why it's reasonable to suppose that the broader market is underappreciating the company's growth trajectory, making current pessimism a potentially outsized opportunity for investors who can recognize the clear reasons for conviction in Roblox's financials.
So if I'm looking ahead, what kind of growth initiatives has Roblox been working on to strengthen its gaming community moving forward?
There are a couple worth mentioning, John. One is the company instituted an age check for users to access chat, encouraging age-appropriate communication and limiting adult-minor interactions on the platform. And Roblox also instituted a new use guide to community standards and a partnership with the Mental Health Coalition to support gamer well-being and positive digital experiences. In each case, the company is putting its users' humanity before their spending capacity, betting on the long-term value its increasingly safe gaming space has been able to generate and is positioned to continue generating into the future.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Microsoft Corp, Take-Two Interactive Software Inc., Capcom Company Ltd., and Roblox Corp., and is intended for informational purposes only. For full disclaimer information, visit themarketonline.ca/disclaimer.